Hi everyone. Let me know if you hear me well and if you see me. I think yes, but we'll be happy to get the feedback. Hi James, hi Rusan, hi Bob. Thank you for the feedback, guys. I will wait 1 more minute, then I will start. Today, in general, we talk about risk management and psychology, but I believe that there might be other things that may be more interesting. Maybe not talking about technical analysis, but exactly what's happening all over the world, and especially in Europe. That most likely that will be the main driving factors for the next week on the market. I think it's going to be interesting talking about how a main let's say a main war or a main big event can affect the market. And sometimes you can see that it can be very difficult to expect as well. Okay, a lot of people expect a war and expect the market to go down like 20-30%, but it's not happening, and we will try to explain why those type of situation happened. I believe it would be a great subject, and also from my experience and from what I know, I traded oil for 1 year and a half in options, and I know that generally what's happening on the news and what you see on the market give you different perspective, and even can expect the future before what it's actually going. So hi, I don't care. So let's start. So yeah, like I said, I wanted to talk about what's happening in Europe. It's the what's happening there is not so clear. Okay, we don't know what will be happening if the war will be even more say more crucial and more terrible. Actually, we don't know. Okay, we know that America gives financial sanctions to Russia, and the market goes up. Okay, when I talk about the market, I talked about let's say the capital markets and let's say the fear on the market, and especially we can see about the VIX. Okay, I know that most of you guys know what is the VIX, but I will show a graph and explain what is it. But generally, it shows us the fear on the market. And just after that, America, Joe Biden, President of America, said that he wants to bring sanctions to Russia and Ukraine. Say to Russia, first of all, because they want to start the war. The market start to be a little bit better. Okay, you see that the VIX went down. Okay, so the fear like diminished, and the capital market starting to move a little bit higher. When I say a little bit higher, you don't mean like 10%, but it's mean like okay, it's like respecting the support that we had on the S&P, on the Nasdaq, and so on. And a lot of people expect, and it can be also from some people of you, even me, when you get like an information that okay, Joe Biden starting to give some financial sanction to Russia, okay, you could believe that the market will go down, but it's totally the opposite. And the first explanation for that is that the market already priced, okay, the fact, or maybe not priced. Okay, let's say the first reason can be that the market already priced this event. Okay, so financial sanctions is not so, let's say, important, so the market will react good. The second thing, and also there is a lot of this type of news in Forex, when the news is like worse than the expectation, okay, you will see that the market react totally the opposite. Okay, so it's very difficult to expect the news to let's say, I don't know, you expect you expect a war, so you expect the dollar to start to get stronger, and because people expect the war to be much more criminal, okay, so the dollar do the opposite. Okay, it's very complicated to understand this type of things. Let's talk about oil, because I know in the market of oil, what's affecting the market is demand and supply. Okay, and you know, I made a webinar 2 times on gold and like 8 months ago talking about oil. When there is a lot of supply, okay, the market tends to go down because there is a lot of oil, and when the supply is very low, okay, so there is very less, there is much less oil in the world, the price goes up, okay, and then each week we get a news, okay, that's called the inventory of oil, and what's happened is that if the expectations say, okay, this week there is in the inventory 2 million barrels of oil, if the news goes out and told us, okay, it's not 2 million, but there is 10 million, so it's way more, you believe that the market will go down, okay, because there is much more oil than you predict. But it's up. What's happening on the market is that you see completely the opposite, okay, what you expect, because there is much more, let's say, barrel of oil. So you will expect the price to go down, but the price goes up very highly, okay, and this type of event happens a lot of time in Forex, even on capital markets and in trading in general, because the investors maybe didn't expect 10 million, they expect like 30 million, they expect much more, okay, and this margin, this difference here make the price move in the opposite way than you saw before, okay. So this is the first implementation that we should understand, and it's not because the news is worst so we will see the market goes down, and it's not because the news is good that you will see the market goes up. And there is a lot of time you can find some confluence and divergence in those type of news, so you should be careful, okay. It's not because there will be a war in Russia that you will see, then you will see, like, let's say, the capital market goes down 20%. And that's something very interesting to talk and very important, and still it can be very difficult. So that's why technical analysis and how you feel in the chart can bring you a lot of information. So I wanted to talk about the VIX. I will share the okay, all right. So this is the VIX, okay. We won't enter into details how the VIX is calculated. It's calculated from options. Okay, for option is different assets than trading the let's say the price itself from the S&P. But for people that know, it gives us the it's a fear indicator. Okay, so when you see that the price moved up like that, okay, so this was exactly for the bottom of the corona, okay, so when the S&P crashed, let's say 30% to 25%, so you see the VIX went up, okay, so there was a lot of fear during let's say 1 week, let's say 1 month, and then the price goes down. Here it's approximately happening, okay. If I go to the daily, you will see maybe even better. I think the war in Russia maybe start approximately here to that peak, okay, you see. Okay, and you see that the price don't succeed to make a break above the 35 here, or even if we look at the daily, at the H1, it will be, I don't know, 32. But you see that the price very difficult for the fix to go, let's say, above 35. Okay, if you will see a breakout, let's say on the VIX, of course you will see a lot of fear in the market. You will see risk off. You will see the capital market goes down. You will see the dollar getting stronger, the dollar index going higher. But as long as we don't see the VIX to break a new high, let's say above the 35. So even you see here that there was a big pin bar. It didn't close above that line. Okay, so the market is still let's say in control. Okay, actually the market is in control. Okay, there is nothing that goes out in control. Even there is Russia and Ukraine. We should like think outside the box and see, okay, this type of thing in the VIX can give us opportunity and understanding about what's happening. As long as we don't see like a big news like Russia is starting to make nuclear rockets to Ukraine, and there will be a lot of deaths. I hope it will not happen. I'm not for war, but if it's happening, of course, you will see the VIX getting higher, like this huge breakout. And here there will be opportunity to go for the to risk off assets like gold, silver. Even the gold and silver already makes the move. It will be even better to like buy again and get stronger your portfolio. Okay. So that's for the weeks. So again, I want to repeat the main let's say the main topic that I talked at the beginning. It's not because there is a bad news that the market will go down, or the opposite. Okay. Generally, the market can already price the market before. Okay. And don't think you know everything on the market. There will be people before you, okay, that already thinks what you think today. And it's very difficult. It's not because you see on the news that, okay, Russia is entering into Ukraine, and it's not because of that you will see the market going down. And it's very interesting to know this type of behavior in the market. I also explain about oil and inventory. I think the topic is explained. But if you have any question talking about that, feel free to ask on the chat. I will also start by analyzing some forex pairs, but still I will try to correlate the fundamentals a bit today about the risk on, risk off. Even we don't see a lot of, there is not much move on the euro dollar, not much move on the dollar index. It looks like the market is a bit consolidating and like waiting for the next move and for the next news on the West Europe, because it's actually making the market move. So let's move into MT5. Okay, so still there is not much movement on the euro dollar. This is the daily chart. It respects actually this supply level. This was also a breakout level that we make. Again, a breakout, we test that zone. So this is the level we respect last week, I think even 2 weeks ago. And then the price here found, okay, the price here on the daily chart found the support that make a double bottom or bounce. And you see the price, if I go to the H1 or even to the H4, you see that the price is starting to consolidate exactly here. Okay. So there is not like a big move. We see as well that this support is respecting very well to that demand that create here. Okay, so this was, let's say, a nice entry point for the demand. This is exactly the middle of the demand, not the bottom. The bottom demand will be approximately here. But here actually it respect. We see still that the market making all the time. If I go to the H1, the lower time frame, we see that it's look like to make a lower high. Okay, from here, starting to make a triangle. Okay. Again, the dollar index is still behaving the same. Okay, it's still on a big uptrend. As long as we will not break below, we are still fine. Yeah, there is very few pips in terms of movement here. It's like 50 pips ups and down. In fact, it's still very complicated to make a swing trades here. Even you expect to have a breakout on the upside. It's still according to your fundamental view on what you believe on what's happening on Europe. And still the dollar, the main movement will be risk on, risk off for today and for the previous weeks. But there is also the inflation that rise. So you have to take in consideration those two topics. That is the risk on, risk off, talking about the war and the uncertainty on the market, but also talking about inflation. Again, for people that know my view, I still believe that the euro dollar will still moved up. Let's continue and talk about risk. Risk off, as people are starting to invest a lot in the metals and especially in gold and silver. Okay, so we had, it's a weekly chart. So of course there was here a strong demand zone that respect multiple time. Okay, for even this pin bar is totally awesome here, making a retest again, pushing higher, and we have this descending triangle. It's actually breaking out. Okay, we see like a breaking structure. Okay, actually the price is on this week is a bit hard for him to reach this point because of this supply here. Okay, still we have to follow. Of course, I will not open a buy here. Okay, if you ask me, for people that already buy from, let's say, 1 year ago, 2 years ago, I don't know, but even buy here, of course you will hold. But for people, for someone that want to get in the oil, so in the gold, my advice would be like to wait. Okay, making a buy here exactly on that zone will not be efficient for your portfolio, as the price can like make again another test. If you go to the daily, okay, even we see that already the price moved up a lot. Okay, the price can go down to this demand, for example, here on the daily chart. It can go down to the lower demand. There is still one here. Okay, of course in the H1 you will see some opportunity. Making a buy here will not be bad. It depends how much time you want to hold it, but if you believe in risk off, if you believe in risk off environment and you want to buy gold, of course the spot to buy is especially not today, as we see the price already moved a lot. It's like $100 per ounce approximately, from 1,007, let's say 1,800 to 1,900. That's a big move in at least no retracement. Okay, we see here, for example, here we see a first retracement. Okay, the market went up, then went down, and then another. So we should wait for a retracement if you want to make a buy. This might be also a great zone to unforce and to get in again. Okay, it's actually, this was a great supply. The market, consolidate for a few days and then break out, but I prefer to wait like a retracement. Even I believe that gold will still goes up for the next months and the next years at least. You should open your buy at a good point. Okay, you don't want to buy at the highest price that actually the market is trading. Still, if you already open a buy position before, so definitely it will be nice to hold it. Do you use Fibs in your analysis? Yeah, I use Fibonacci for retracement. Not all the time, but when I see that the market have a high retracement, let's say if I use this wave here, let's say this one, I believe that here can be like the 50 or 61 Fibonacci levels, okay, according to this move. So of course, if I see that there is a strong retracement, I will of course use Fibonacci. I don't use it all of the time, but when I feel that it can enhance my analysis, I will open it. Okay, so you see here the market don't touch the 61 levels. Okay, it was very close, but then react, and again it depends. When you have an uptrend and you want to invest, let's say if you use, I believe that some of the point I analyze in the chart, you will also find some demand spot. Okay, exactly at the at the FIBO levels. Okay, let's try to do that. So of course, if you can combine the two, you can combine the demand zone. If you can combine a demand zone and FIBO, it will be awesome. Okay, so it will be the 50 level will be here. Okay, so it forms a nice spot. Okay, you see it stands exactly at the breakout we see on the daily chart at the supply here. And then you will have the 38 level that will be the retest. Okay, I just want to get rid of all what I did. But here, if I wait for a retracement on gold, it will be exactly on that zone. Okay, exactly at the breakout here. So we break out this zone. That was a very strong zone. Okay, and then if the price retrace until the 38 zone, this would be a good buy, for example, if you believe still in risk-off environment. Okay, so when you trade gold, of course there is technical analysis, but there is a lot of fundamental to understand. Okay, and I also made a webinar that I invite you to check and see on our YouTube channel. Gold is not only risk on, risk off. There is also physical supply, physical demand. You have to understand or actually mining is working in gold to know if there is less supply, more supply. Is there a demand or not? And of course, gold. There is a lot of link between gold and other markets, and gold and physical actually demand and supply. Like any other commodities, okay. It's like gold is a tangible asset. Okay, you can actually touch gold. You can have some jewelry, and you have to understand what can drive the price. If I look at silver, it's still the same. Okay, it's still a metal, a precious metals. It behaves approximately same as gold. It respects a lot this demand zone. That was a good buy for multiple time. Like the monthly chart is looking very good. Okay. No, there is actually not FIBO level here. Like silver in industry, yeah, as well. Definitely, you see that there is also a ratio. There is the gold and silver ratio that I talked about in the webinar. That it's interesting also to look at. But it was investing in those type of commodities, and especially during this time of uncertainty in the market. Why there's not the 5ers not trading for shekel? Shekel is an exotic pair, so we don't touch it too much. We are mainly trading Forex pairs that there is a lot of liquidity, so it's major and cross major pairs. Short position in Euro CHF scalping. Let's look at that. Actually, guys, you should be careful by trading CHF. The margin remains high, the margin requirements, also the spreads. The bank can intervene in this market, so try to be very careful on trading CHF, especially the Euro CHF. Okay, you should be careful, because when the, maybe not here, but in 2011, when the price touch exactly here, okay, the bank intervenes. So try to be very careful that there could be high volatility. Swiss banks can intervene in the market. That's why the margin will remain high. Okay, we believe that after this move here on the daily chart,
we believe that, okay, we could, let's say, reduce the margin, but still, you see that the market still goes down. It can touch again this demand. So we'll still wait. So try to be careful, but yeah, there is a lot of pressure on the downside in the research in these pairs. Yeah, I will not enter too much on it. Let's look at the pound yen and the dollar yen as well, just after. Okay. Okay. So looks like the price consolidate exactly at that point. Actually, on the daily chart, we are exactly at the top of the range. Okay, it's actually maybe not today, but let's say a few days ago, when the price approached here. Okay, you had, of course, a good spot to make a sell. Okay, even it's like starting to create a triple top. Okay, you have to see what's happening on the next days, but this is looking good. Okay, of course, for people that expect, if you believe in a fundamental way that the price of the pound yen should break it above, okay, if you expect, like, it's the same example that I give on gold, okay, and you want the price of gold to, and you believe that the price will go up, I will of course not open a buy here. Okay, it's for me not a good price to attract to hold it on the long term. Okay, I would prefer to get let's say all that point. Okay, even I don't think that point can be good enough, but of course I would prefer to get it on the lower range. Okay, and then to hold it until this supply. And if it's breaks, so of course I will make a lot of pips here. There is you see on the lower time frame, let's say on the M30, on the H1, there is a lot of noise, actually, a lot of pin bar, a lot of big movement. But if I go to the daily chart, I see clearly what the price is telling us. Okay, big consolidation zone. We are actually on the supply here, and the price starting to make this type of consolidation. Okay, so you see there is a support here. Okay, so it's like a descending triangle. Okay, so that's what I see actually on H1, on H4, sorry. Yeah, I looked at the Australian dollar just before I came, and the price make big push. If I put my volatility indicator, that is the Bollinger Bands, I actually don't use it because I don't want to give you a lot of noise. Okay, we are approaching a danger zone. Okay, it's like an interesting supply here. Even there is this big uptrend are starting. Here making a sell is not a bad idea. The risk reward would be very good. Okay, if you make a stop loss above that high and you expect to reach again or the bottom zone or the middle of the zone, what it can give us actually. 50 pips. Yeah, it will be 1 to 3 risk reward at least. Okay. There is also a topic that I explained a few times. If you look at the H1, you will tell to yourself, okay, it can be very difficult to sell here as the price is on a big uptrend. So at least I want to see a breakout, okay, on the bottom side. Okay, so if you wait that the price actually come back here, okay, and then break it, you will open the sell position exactly here. Okay, and the risk reward that you will take will be a disaster, like completely. So that's why for myself, the confirmation is not so much interesting. It's not so much interesting me. I want to find the best spot to make my sell. Even there is a strong uptrend, if I believe that this zone is a good zone for I don't know, fundamental way, and I don't believe that the Australian dollar can make a big spike above. Opening a sale on this type of candle, okay, will give me a lot of risk reward. Okay, even I don't have any confirmation. Okay, making a sell here, you don't have any confirmation. Actually, it still can be a little bit risky, but on the long term, you will open your position and your entry at the best price that you can. Okay, and of course, if you want to expect a buy, I can't make a buy here because we are still in a very strong area, a very strong sell area. So if you want to make a buy, or you already made the buy just before, let's say at that zone, it can be also here, it can be at the bottom. Okay, and if you want to make a buy, at least you should wait or a breakout. Okay, so you see a breakout here, and then you wait for a retest. If you see that there is no retest, you will not open a market. Okay, you will not enter at least. Okay, so you want to retest if the price break out, and you will enter at that zone. Okay, so that's actually what you want to do if the price break out. And if the price don't break out, so you will go for a sell with a tight stop loss. Okay, that's the main type of things I will do. But I will not open a buy when there is already a high volatility with no retracement. Exactly what's happening in gold. Okay, it's exactly the same situation. I will not open a buy when I see that the market already make 5-6% on the upside. Okay, that's not in my opinion, and that's not what I will do. Let's check at the New Zealand dollar. Yeah, this is approximately the same. Okay, so when you see a strong movement, okay, that's already the market made 250 pips on the upside. Okay, you don't want to be the last guy to buy this type of market. Okay, so the first thing is or to wait or to actually find the zone. Actually, this consolidation zone can be like a stop, okay, for this type of movement. And actually, we see also on the weekly that we make all the time a lower low. Okay. Making a buy here would be completely difficult. Okay, so try to understand that at some point, if you wait the confirmation, you will enter the market, let's say in a delay, okay, according to other people. Okay, there will actually people that will sell the market. Giving an example, let's say the price today close here. Okay, there will be some people that attract that price 60 pips above you. Okay, and if you open here, okay, the risk reward will be below. The risk management would be very good to do. On these pairs, actually, I don't see actually. If you want for a confirmation on the daily chart, it can be. We are still at the bottom, let's say, of this consolidation zone, and we'll see also here we are exactly at the bottom. I think the
the main efficient point will be like at the middle. Okay, this is like overextended, so I will not take this into account. But actually, at this point, might be a good good area. Okay, and you can also combine, you can also compound. Okay, you can open a sell actually here, a sell here, and a sell at the top. Okay, and then you compound your selling entry. Yeah, thank you for the feedbacks, D Corp. That's exactly the Australia and New Zealand are exactly correlated, and we see the big spike today. We also see that on the dollar. Okay, and I believe that we will see some consolidation or at least a short retracement on those pairs very soon. And if not, put the stop loss very close of your entry. Okay, as the price is a big uptrend. There is also on the, maybe not on the weekly chart, but you can see on the daily, it's still a longer view, but okay, this can be approximately a point, okay, to enter. Yeah, pound dollar exactly the same. On the euro dollar, we see consolidation during those few days. This is a playground for day trader actually here. Okay, on the H1. Okay, look how much time the price bounced. Okay, one time, two time, the demand here again. I don't have my, let's say, my indicators here, but sorry for the change in color. Yeah, I do when trading. I like to play this type of consolidation zone. This gives me a high risk reward, and I can do this a lot of time on a day trade. Okay, it's actually here the H4, so believe how much time you could enter the market on the H1 chart. Okay, so here it's, let's say, it's one time, second time, three time. You can compound. You can do a lot of things. Okay, until the range is finished. So at least you should expect to lose one time, or like you expect, like you said to yourself, okay, I believe that the range will break out, or it will break out on one side. Okay, you believe that, I don't know, there is something that's happening, and this range is not relevant and will break, so you will not open a buy here. But here you see, once you see, this is very strong actually. Okay, the demand here, react here, again react here. Okay, of course, when you trade this type of consolidation zone, the stop loss should, let's say, should be closed, but should be below the low. Okay, this should be, let's say, here. Okay, and not so close, because you can get trapped. Like here, you can get trapped if you put the stop loss just below that here. Okay, let's say you buy here and you put a stop loss just below, you will get trapped. So try to manage your risk management. At least I prefer to open a lower position size, but at least being comfortable by holding my buy entry. I think on the euro dollar it's happening quite the same. Yeah, maybe a bit more complicated to make something here, as you see that the range is not so clear. Okay, at least there is this demand that hold
for the moment. All right, this is a nice spot as well. Okay, this is a nice spot. Actually, you have here a double bottom. Okay, this is very clear. Okay, the price pushed, break actually this high, and we are starting to consolidate here, approaching this demand zone. Okay, so this demand zone will be a nice spot to make a buy. It's probably it's also maybe the 50 FIBO levels. Okay, like this kind of retracement I like to see because there is actually a retracement, and it can give me something talking about FIBO. Okay, so you have the 50 FIBO exactly at the demand zone we want to. Okay, the 50 FIBO is here. Still on the H1, we are very close to touch. We didn't touch. Actually, the best spot to enter will be on this rectangle. Okay, you can also have a lower demand just here, but the 50 levels here can be a nice spot to make an entry. Even here may be a good spot, but I believe that the market can push and attract a lower low here. That's it. What I expect. Yeah, this level is important for 3 points. Okay, this is actually the breakout and retest. Okay, this is breakout and retest of that zone. Okay, there is also a demand just here. So this is not the extreme demand, but this is a demand still. And this is the 50 FIBO. Okay, so you have actually 3 type of zone, 3 type of indication that this zone is a key zone, at least. And of course, I don't know if it can give you like some stochastics or some oscillators actually. Let's see if you have something like that as well. No, nothing interesting. As you see, it's exactly under, let's say the average price for October is exactly here. So you see, we are here at the average price of last October, last September. Okay, so we made high, low, but all the time the average price is exactly that price. Okay, 1.44 on the EuroCAD. Okay, it looks like a fish. It's a diamond as well. Anyway, I don't use this type of analysis. That some guys use like diamonds or whatever. I don't know. I don't use that. Okay, guys, any other questions? Maybe if you want to review another pairs or if you want to talk. What I expect, let's say on Europe. So what's happening on the S&P actually? Yeah, it's a high volatility time, let's say. Maybe not in Forex, but at least on capital market. Still high volatility time on gold and silver, of course. Talking about rate hikes, I still believe that there will be other countries that still will higher their interest rate. Okay, US will continue to do that. They expect to make it like 3 times for that year. New Zealand already did. Pound, let's say the pounds or the UK already did. So you should take this in consideration for the next year of trading at least. Okay, there is high inflation, but again, as I explained at the beginning of the session, it's not because there will be a hike in interest rate that the market will move in the way you want. Okay, there may be already people like when you will trade the euro dollar, the market already priced the fact that the Fed will hike the interest rate 3 times. Okay, so there might be a good, let's say, there can be a high chance that the market can move the opposite way than you thought, talking about the hike interest rate. Okay. Who wins? Of course, the dollar remains one of the strongest. I wouldn't share crypto, but if you talk to me about Forex, we know that the yen is strong, the dollar is strong. The euro is less strong like that time. But I will say the dollar and the yen, of course. But still, if you want me to diversify again your portfolio, if there is high inflation in terms of fiat currency and value, okay, so fiat is all the Forex pairs. Investing in crypto would be a nice edge against this high inflation that we actually get. But this is my point of view. I won't trade crypto on a daily basis. It's only like for a long-term investment and portfolio. All right, guys. I hope it's helped. We talk about many subjects. We didn't take trades today as the market is very not a big move. At least we see moves we see moves in euro. Sorry, we see move in gold, silver, Australian and New Zealand. But talking about euro, dollar, pound, yen, we didn't see like a high move. Like I said at the beginning, I expect what's going on in Russia and Ukraine to be a driving factor of what will happen on the next weeks. As long as there is nothing to move, the market can continue in this consolidation zone. There was nice opportunity on the pound. As you see, there is a ping pong bouncing back all the time. So yeah, I expect I want to see higher volatility, at least on the dollar and on the pound. But for the moment, we should be patient, and we should look at the Australian, at the New Zealand, gold and silver that actually moving very well lastly. So again, thank you very much for being with me during this session. I think tomorrow there is Gary Dayton talking the second let's say session about psychology. So I invite you to come. It's a very interesting guy that learned and that teach a lot of good traders and famous traders in Wall Street. So again, thank you very much for being with me. For the trading room, we will meet you again on next Monday. Try to be careful during the end of the week. Might be some movement. And again, have a nice day, guys, and we stay in touch. Okay, see you careful. Bye-bye.